Today's markets closed with a mixed and cautious tone as investors digested fresh economic data and corporate earnings. U.S. stocks ended slightly lower midweek after a stronger than expected January jobs report reinforced the view that the Federal Reserve may hold rates steady for longer. The January non-farm payrolls number came in well above expectations, adding roughly 130,000 jobs, and trimmed the unemployment rate. Outcomes that suggest the labor market remains healthy and not yet ready for a policy pivot. That strength boosted optimism about sustained economic growth, but trimmed some of the immediate market's hopes for near-term rate cuts. Equity performance was uneven today, while cyclical and defensive stocks found bids amid slowing momentum in growth names. Technology and software shares continued to struggle, with volatility lingering around AI-linked and high-valuation sectors. Among individual movers, semiconductor firm Micron Technology rallied strongly after upbeat earnings and optimism around demand for AI data center memory, helping lift parts of the tech hardware space. Turning to commodities, gold prices continued their climb, with futures trading above $500 per ounce, extending gains as investors look toward this week's economic reports. Gold has been rising recently and now shows nearly a 5% gain over 5 days, underscoring its role as a hedge against uncertainty and mixed macro signals. Silver, while more volatile, has also experienced strength this year, though its industrial demand dynamics have kept price action choppy. Market commentary from analysts also reinforced gold's appeal, with some strategists describing it as a buy-on-dips opportunity thanks to central bank demand and broad safe haven interest, even as silver consolidates in its trading range. In contrast to precious metals, risky assets like cryptocurrencies remained under pressure today. Major cryptos such as Bitcoin and Ethereum slipped modestly, with Bitcoin trading lower by around 1% as markets paused for breath after recent swings. The crypto sector has been sensitive to economic data and broader risk sentiment this week, and several crypto-linked stocks, including Robinhood and Coinbase, extended losses following mixed earnings and ongoing weakness in transaction revenue. Bitcoin's current price action reflects a short-term consolidation phase, with traders watching inflation data and policy expectations closely. Some analysts view the market's reaction as temporary and expect a potential rebound later in the week if inflation softens and interest rate cut expectations re-emerge. So what should investors look for tomorrow and in the near term? First, attention remains firmly on key upcoming U.S. economic data, particularly the Consumer Price Index, CPI, which will shed light on inflation trends and could sway Federal Reserve expectations later this week. CPI outcomes that come in hotter than expected could strengthen the case for continued higher rates and pressure risk assets further, while softer inflation might reinvigorate hopes for rate cuts and support both stocks and commodities. In the stock market, traders will also watch for additional corporate earnings results and forward guidance, especially from consumer and tech names, which could provide fresh insights into demand trends and profit momentum. Mixed earnings has already contributed to the cautious tone this week, and more results tomorrow could reinforce or reverse that bias. For precious metals, support and resistance levels in gold and silver will be important, with traders watching whether gold can hold above recent support near $5,000 an ounce and silver consolidates or breaks into a new range. Both metals are now sensitive to interest rate expectations and global safe haven flows. In crypto, volume and volatility are expected to remain elevated as Bitcoin and Ethereum test key support zones. Any shift in risk sentiment triggered by CPI, Fed commentary, or macro data tomorrow could quickly move prices, either back toward recent highs or deeper into consolidation. To close, today's market action reflected mixed signals across equities, commodities, and crypto, anchored by strong labor data, cautious earnings reactions, and evolving rate expectations. Gold and silver continued to benefit as structural hedges, while cryptocurrencies remained volatile. Tomorrow's inflation data and additional earnings will be critical catalysts for directional clarity in both risk and safe haven assets. Remember, if you'd like to stay up to date on the latest financial news, don't forget to like and subscribe. We'll see you tomorrow.